Hey, very good morning, everyone. Charles here, FRGNT Daily Chart Analysis. The time just approaching a couple of minutes to 8 here in Milan, Tuesday the 31st of March 26. Well, we'll start with the better news. It seems as if my allergies have subsided. Therefore, I don't have to speak with a blocked nose and you don't have to listen to a robotic type of breakdown. Well, the first thing I'll start with is, well, it usually is the DXY, but what I'll bring you to is a great question that I've had on TradingView. Here we are. Let's jump straight into that. So the question was, or rather the challenge was, if your analysis supports positive DXY, the ripple effect will be sales on EU and GU. Why the buy position in the prevailing downtrend? Great question. Really, really great question. And I will put that to the test based on the charts. So, of course, the DXY, as we stand, very much so bullish. There is no hiding that. We can't defeat that object. It is bullish. However, like every trending pair, we must recognize that what goes up will always go down in terms of higher highs created in the market, particularly on the 15-minute. This is the intraday perspective that's very much so important when looking for the opposing directional trade like this trader has questioned me upon. So if price is up here, for a good example, and it has made a new high, I'm now expecting price action on that 15-minute time frame to create me a higher low. Now, in contrast, if that aligns nicely across the cross pair, for example, EU, let's say for good example, and EU is actually supporting on its own as a standalone pair, EU is supporting a potential long position, then of course I have to understand that my long position that I'm taking is going to be, or is more than likely going to be, very much so short-lived, based on the fact that the catalyst, by way of which is the DXY at this time, is simply creating what I will perceive as this extension, i.e. after the higher high, the higher low, to then potentially take me out break even, or even stop me out as a full stop loss if I fail to manage the position as I should, and it will then look to create that higher high. So that is exactly the question in a nutshell, and that was my answer, to be quite honest. Well, if the cross pair is creating, to repeat, as a standalone pair, a good opportunity for a long position. It can't be a great setup based on the fact that, as this trader has mentioned, the trend on the EU is very much so down. But my thought process is, well, if the DXY, which is up at the highs for whatever reason, could well turn around, I am in a position in the inverse, i.e. to take advantage of the fact that I am long against that. So it's very much so an aggressive type of trade, and without the full confirmation, that is why my analysis a couple of days ago was along the lines of, if you are going to take a position, let's see if I can have it here, across the cross pairs, i.e. GU, EU and AU, longs, you have to manage that very much so aggressively. Let me see if we got it here. No, that would be over the weekend. Yesterday. Here we are for a good example. So GU, FRGNT opinion, long positions should be managed aggressively. So if that is my thought process across GU, then of course that applies for EU as well. Long positions should be managed aggressively based on US dollar strength. So that's exactly what I've done. You can see here is the order book that was used for that long position, and it was managed to break even aggressively. So that's pretty much that, to be quite honest, answering that question. A great question, and I like questions. It allows me to really dive into what am I doing and why am I doing it. So that would be the answer to that. So moving on with the day, what do we have now? The DXY, of course, much of the same, to be quite honest. If you are watching and listening over the duration of the last week or so, then you will see that DXY is just continuing to push bullish. The only difference that I have now is I don't feel that there are any long-term positions in terms of looking to long GU, EU and AU in the immediacy. Any positions, just to emphasize that, any long positions on those cross pairs will certainly have to be managed aggressively. as a result of failing to find structural breaks of structure on that 15-minute time frame. And if we look to the daily time frame, I don't really see any place where the DXY can look to slow down until we start to reach some wick imbalances that we can find on that weekly time frame. Top right hand chart, I'll bring that to your attention up here. Wicks often suggest liquidity, i.e. price has failed to push up and close above this area, which means there is an overwhelming sell pressure from this area to the downside. Now, with that said, taking trades from a wick imbalance is more often than not one opportunity. So the wick imbalance will provide that liquidity once price gets into that area, in my opinion, just the once. Once you've had the reaction from that wick imbalance, then it simply must be removed from the chart as a result of higher probable positions are to be traded from order blocks. And as you can see on that weekly time frame, there are no real clear order blocks until we reach up to this sort of 103 spot, for even the 104 area, to be quite honest. With that said, along the way, I've just noticed here now, it's not an order block that is available, but certainly there is a point of interest in this higher type of area, but it has been mitigated. So again, you have to get rid of it and understand that if a turnaround occurs in there, you'd have to be more reactive than preemptive, because there is no order block that's available. So with that said, look into the 15-minute time frame, because that's for me really is what is going to count at the moment in terms of what we've mentioned earlier regarding being aggressive or not. What we can see here is we have now made that higher high, higher low, potentially looking to create that higher high. Now, with that said, if price just continues bullish, then that will lead to no real opportunity for me to take a short at the moment, because let's say, for example, on AU, if the DXY continues bullish, AU is just going to continue short, GU is going to continue short, and ANEU is also just going to continue short. So what we really do need to see is some bearishness coming out of the market on the DXY to at least provide us with a short-term long opportunity on the cross bears. Now, what that will look like is price, hopefully, if we can have price push up into this area and then give us some confirmation up at these highs by way of lower time breaks of structure, there could well be an opportunity to take a long on GU. Sorry, my phone is going bananas. Right, back with you. Where were we? We were saying up at these highs, there could be a potential for a long on GU, EU potentially, or even not so much AU, but that is the area at the moment that we have. What would be better if we had a snap of that area? What that would mean, a snap of that area, would be DXY weakness coming into the market, and of course snapping this area here on GU, allowing us to potentially select an order block down at these lows for what I have to the right hand side, that type of opportunity. So although I am overwhelmingly DXY bullish at the moment, suggesting that the way to go would be shorting the cross bears, I can see potential opportunities to be in the market to take long positions, because it does really align nicely with what we have on the higher time frames in the immediacy only on let's say, for example, GU. What we can see on the higher time frames on GU is, yes, we have indeed closed below the weekly 50 MA, huge rejections to the highs, and then we've closed below that EMA, as we've said, the daily also below that 50 EMA. So expecting, this is why it is only short-term long positions, expecting a pullback into those areas before continuation short. So whether or not you want to take the long positions, it's down to your own risk appetite. If you say you only trade along or in line with intraday and higher time frame structures, then of course you will sit out the longs and wait for the shorts, which are overwhelmingly the better type of position. I must emphasize that. So how are we able to capitalize then on taking intraday short positions? Well, what we see here on GU. We'll start our analysis on GU. I'll bring that up larger for us. Is GU is simply, and DU for example, is simply trending beautifully in line with at the most basic level of trend that you have, creating lower lows and lower highs. And unfortunately, on the way down, well, I should say fortunately, and I'll get rid of I'll establish the unfortunate part in a moment. Price is leaving order blocks up at the highs where we would want to be shorting from, i.e. after this low, price came in rather, created a lower low that then allowed us to select an order block up at the highs. The only thing that we don't have, so the unfortunate part, is price is failing to pull back enough based on the fact that the DXY isn't allowing enough weakness for us actually to have those full pullbacks onto those cross pairs to take the shorts from valid points of interest. So the unfortunate part, simply just got to wait to see if price is going to come back. Now, what we had over the Asia period is this order block just here was tapped in Asia, and we had that reaction from it. So unfortunately now, once London opens, I cannot reuse that order block. What I'm going to need to see is exactly this for the higher probable short position: a snap of Asia lows, price pulls back into an area of imbalance left up at the highs, much like what we have here, and then I'll be looking to take a short. That short position definitely will be in line with DXY strength continuing to push GU to the downside. So that's what I've got in terms of shorts, and the illustration there just depicts it nicely. For the long position, the best type of long position would need to see some structure breaks on that 15-minute time frame, and the inverse, a order block left there down at the lows for us to manipulate a lower time frame break of structure before then taking that long position. Also, why does the long position make sense? Well, we can see here we are trading within that higher time frame daily order block, where naturally we'd be looking for a reaction from that area. It is going to have to be a short-lived long position, on the basis, just if you were to take this pair as a standalone pair, forgetting about the DXY effect that we have, we are trending below the weekly and the daily 50 MA. And with that said, we're also below the 4-hour 50 MA. So therefore, they are definitely, the 4-hour most certainly will have to be the initial target in terms of, for me personally, I'll be out of the market if I'm able to take a long position and price comes up to that 4-hour 50 MA. By that time, I would have closed that position out. Expecting the rejection from that 4-hour 50 MA in line with the 4-hour trend, and the fact that it would also make sense, the fact we've made that lower low. Let's get rid of that. The lower low has now been created. After a lower low, we're expecting a lower high. So I know in myself that I'll be trading that lower high extension before the lower low continuation. So it's an advanced way of trading. It's not just reversal trading as and when you failed to do so. It's reversal trading with confirmation across the DXY, which is the catalyst, and the pair itself, i.e. significant breaks of structure, pullbacks into imbalance, and then you go with the first type of position. Right, so that's GU spoken about. AU, weekly time frame. I'm almost desperate to get in this position, but again, with everything, you must await to see if it aligns with your strategy. At the moment, I haven't had any alignment in order to take this position. So where are we? We finally closed below that area in the market that price was respecting on that weekly time frame with a bearish engulfing candle to the downside. There we have it, top right hand chart. We can see that. So after a lower low has now been created, again, much like on GU, after a lower low, I am expecting a lower high to be created before I then can take that lower low. The difference that I have here on AU, of which I do have on GU, is I have no real reason to take a long here. There isn't a setup long that I can take. Therefore, for me, AU is simply one of those where I'm just going to have to wait and see if price is going to pull back. There isn't a long setup, unfortunately. So what I'll be looking for, just like on GU, we've had an order block respected over in Asia, and we've had the rollover to the downside. That's not quite good enough for me for price to come back up to this area and me take immediate shorts upon London open. What I'm going to need to see is a snap of Asia, much like what we've had here, snap of Asia, we've had the order block left behind, prices come back in, and then we've had the rollover. So just using previous history, what I'm going to wait for is a snap of Asia, wait for an order block to be created. Hopefully there is one. So there's no order block that I'd want to be shorting from here, so I'll have to revert to the higher order block that is still available up at these highs. So AU, most certainly a short position that I want to be in, but as you can see, based on how the 4 hour is moving, we're just not having those conclusive pullbacks in order for me to take the short position just yet. However, what is great to suggest that when you wait your setup and you don't chase the setup, more often than not, you will be paid in finances, i.e., simply you've got your setup created, wait for the setup to come to you and don't chase it in the immediacy. So I'm just going to wait to see if price comes to that 15-minute order block, and I'll be happy to take that short position in line with the overwhelming bearishness that we have on AUD USD, again based on the fact that the DXY is incredibly bullish. So that's my outlook on AU, and you can see the tremendous amount of returns that could well be available if a short position could be activated. We've got around a 200 pips simply from order block to order block. So that's definitely a position that I'd like to be in more realistically, whereas that 15-minute order block around about there. So yeah, close to 200 pips. That, in my opinion, is very much so achievable if the setup aligns. And then on the 15-minute time frame, again, the most basic format and most basic form, I should say, of price action, just lower lows and lower highs. We can simply draw that on lower low, lower high created, lower low. Hence why we've now selected this order block and expecting price to come back into that area. Or better still, you can say lower low, lower high. We've had that lower low from that area, breaking significant structures. So here would have been the best order block in the intraday perspective, where I'd like to be looking to take that short position from there. However, if price comes up to this area, I'll just need to see that confirmation before taking a short position. So that's AU, to be quite honest. No long positions are available, but again, we can put a long scenario on here. If I get rid of these illustrations, what a long scenario would be for me is I'd need to see some significant intraday perspective or intraday areas broken to give me the perspective that price could be potentially ready for a short-term turnaround. So that would be a break of significant point of interest, i.e. the most recent lower high that's created the lower low. So it could be here if you're slightly more aggressive, or here if you're a little bit more patient and want that pullback into an area of imbalance left behind. Confirmation will absolutely be required, because what this pullback could be is just a deeper pullback on AU for potential lower low to be created. Hence why confirmation required before you take that trading opportunity. It would be a lower time break of structure, as you can see, a lower time frame gam box to be selected, and then you'd look for that long position towards the upside. Where you'd have to close that position out, or looking at the DXY first and foremost, seem to find, or looked or seek to find, I should say, points on the DXY where price could look to react to towards the downside. It would be on this time on the DXY, and then also with that said, you'll be looking to seek your order, or not your order block short, 50 EMAs that is against that position. So the first EMA of which I'd be looking to manage or close the position out by would be around the 4 hour 50 EMA. So that's AU at the moment for myself. There's not much to offer, to be quite honest, with DXY, GU, and then EU. What I thought to do here is mark EU up live for you all to have a good idea of what I'm doing. So here we go, top down analysis, top right hand chart. We've got the weekly time frame. Not too much to adjust on the weekly time frame, since it's a very slow moving time frame. Just the EMAs, more often than not, to have a good look at, double check that they're still in the correct position as we look to superimpose that across all time frames. So we can see last week's weekly candle closed below that weekly 50 EMA. So of course on EU EU, I'm looking for the pullback up into that 50 EMA before continuation shorts, hence why I took a long position yesterday and managed that quite aggressively in line with the DXY, and also in line with the fact that EU is very much so bearish at this time. So not too much else to go over on the weekly time frame there on EU. Now towards the daily time frame, where are we? So again, still below the daily 50 EMA, so we're expecting pullbacks up into that region before the rejection continued shorts. What that's going to look like again is EU changing trend or changing its immediate bias on that 15-minute time frame. So what do we got? Daily